This is Retire Hour.
Welcome into Retire Hour, the weekly show that helps you stay up to date on the ever-changing landscape that is retirement. And we've got an update for you this week. There's going to be an upcoming deadline here, March 31st. Social Security is going to be having some changes there. We'll be talking about that in the first segment. After the break, we'll be talking with Kim Sixkiller, our long-term care and life insurance advisor, could put it that way. And she tipped me off to something last night that was kind of interesting. And we had an appointment, and she told me that the CAPERS death benefit is taxable. You won't want to miss what we talk about here after the break if you're a state or local employee and participating in the Kansas pension plan, the CAPERS program. And then, of course, rounding out the bottom of the hour, we'll be talking with Larry Clefcorn, an advisor with Market Advisory Group Wichita. He has a client story this week of someone that didn't want to leave anything to their kids. They wanted to make sure they spend it all. We'll be talking with him about that. And then, of course, in our Medicare segment with Mark Benefill, we'll be talking about, he got a question the other day of how Trump raising the prices for drugs will impact someone's retirement. That's a question there from Vicky. We'll also be rounding out the end of the show with Lauren Dietz, one of our tax advisors with Market Tax Services, discussing an extension. And if you haven't got your taxes done, or if you're not even close to getting your taxes done, why you might want to be taking a look at that extension. So, of course, this is the weekly show, like I said, that helps you stay up to date on the ever-changing landscape that is retirement. And to me, this is a big change that's coming up. And I mean, I can see the benefits of what they're touting, but Social Security, you're going to have to verify your identity in person or log in with that SSA.gov account and verify your ID there if you're filing a new claim or new application for Social Security, and or you're going to change your bank information. And this is just one of the changes that I think will come out over the next 12 to 18 months here. And if you don't have someone that you can rely on, I want to invite you to come in and talk with us. This is something we deal with day in, day out, whether it's over on the Medicare side or if it's over on the advisory or the financial advisory side. Social Security has that online portal that if you don't have an account, I encourage you to set one up. And you can go to ssa.gov. And if you've already set up an account prior to, I think it was September 18th of 2021, you have an old login where they do not use your email. But if you had not set up an account, then they give you a couple of alternatives. I think one is login.gov. That's my preferred one. I just use that one. But there's another one called ID Me. And if you don't have these accounts, again, if you're going to change your bank information with Social Security, say you move and you need to change banks, or say you just want to open another account with a different bank and want to have it go into there, you're going to have to prove your identity online to change your banking information. And then if you're going to file, they used to take verifying your identity over the phone. They're not going to do that anymore. You're either going to have to go into a local office, or you have to get on that account online. That's why, again, it's so valuable at ssa.gov. And I would use, again, the login.gov option. And once you have that set up, there's a number of other benefits or other reasons why I would encourage you to have that signed up. One of them, this time of the year, you can actually go onto your ssa.gov account and find your 1099, find your tax document that's saying, hey, this is how much you were paid last year in Social Security benefits. And that's an easier option for many people because so much junk mail comes in the mail anymore. It's hard to sift through what's legit and what's not. And I know sometimes people don't even look at their mail, but you need to go on and create your ssa.gov account with login.gov. It'll use your email. So if you go to that login.gov to set it up, put in your email, it will email you a link to that email address to complete your registration. But this is something that as they're trying to identify fraud, waste, and abuse in different areas of the government, you're going to need to have that ssa.gov if you want to change anything or prove your identity. And there's some of the critics are saying, if people don't have online access, or if people live nowhere near a brick and mortar in-person office location, that the only really option they have is going online. And I know some of my clients and in this age group, They are more technology savvy than others. But if you're not tech savvy, if you're not someone that can or feels confident of going online there and setting all that up, what our Medicare department, we have a number of advisors here that have walked plenty of people through that process. And I want to extend an invitation to you. As this March 31st deadline approaches, where people who claim benefits can no longer verify their identity with the Social Security Administration over the phone, individuals looking to apply for new benefits or change their current payment information must do so in person. If you don't have someone that can help you with that, reach out to us at 833-MAG-REPORT. That number again is 833, the letters MAG for Market Advisory Group Report. We'd love to sit down and help you with that because, again, this is going to be something, and I think this is just they're probably just getting started. This is going to be something that's very important to have as things go forward. And sometimes it's not so easy. Sometimes people have had their identity compromised and the Social Security Administration needs to mail them a physical letter to their house. And then you use that PIN to go online there and set that account up. But this is something that I'm concerned for, again, the demographics, the kind of the generation that we're helping right now of preparing or going through retirement. If you don't have this account, it could be a pain in the rear, bottom line. But if you have the account, that's great. Make sure you keep that. And if you're going to change your payment information, if you're already being paid a Social Security benefit, you're going to need to have this online account because it's going to verify your identity. It's going to verify you're a real person. So we'll stay tuned. We'll be right back with Kim Sixkiller talking about, again, this CAPERS benefit that she told me was taxable. And it's kind of got my head scratching here because I thought life insurance wasn't taxable to the beneficiary. Stay tuned. We'll be right back. Welcome back into Retire Hour, the weekly show that helps you stay up to date on the ever-changing landscape that is retirement. I'm your host, Matt Goolsby, and I was in an appointment yesterday with actually someone that listens to the show. I won't use their name, but this couple was in here, and he is a teacher in Kansas, in Wichita, and he has this CAPERS benefit. And what was really cool was having someone that stays up to date on all this stuff because it changes so frequently. I want to bring in Kim Sixkiller, and you're up in our Kansas City offices, but we pull you down in video or remote all the time. And this is something, tell us a little bit about what this benefit that we were talking about. And then I've got some questions for you because I'm still learning about this.
Yeah, so we were specifically talking about the CAPERS benefit. That's a funeral benefit. It's an additional benefit outside of the life insurance policy. So previously it was $4,000. Anyone who passes away after July 1st of 2024, they did increase that benefit to $6,000. Oh, but what's unique about, sorry.
No, that's I mean, again, the $4,000 benefit for the funeral, I think you call this a funeral benefit, right? I mean, it's not technically life insurance, but it was $4,000 and now it's gone up to $6,000. Well, that's good news, right?
Yeah, that's awesome, Matt. And that's also why this benefit is not non-taxable like life insurance. So what they do on this benefit is because it's a funeral designation benefit, if that is passed on to an heir, that benefit is going to be federally taxed. It still is not taxed by the state of Kansas, but there's a federal tax applied. Well, there's a way around that. So what you can do is you can reassign that specific benefit. You don't have to touch any of your other benefits, but reassign that to the funeral home that you select. And then CAPERS will issue the full $6,000 to the funeral home that you pick. The funeral home actually is going to receive the 1099, but at the end of the day, the point is you will get the full $6,000 to help with your loved one's funeral and not have to deal with the tax.
Yeah, so that's kind of what you were walking the couple through yesterday about was how the good news is it's gone from $4,000 to $6,000. But again, in this form, it says is this a federally taxed benefit? And I was just scratching my head thinking, life insurance is not typically taxable. I mean, there are some circumstances where if you deduct it from your taxes or do some other things, it can be. But this is a funeral benefit, not a true life insurance benefit. That's what makes it taxable by the federal government. And what an interesting way there. I want to say that again because I don't want our listeners and viewers to miss this. This is a benefit that you can assign to the funeral home, like you're saying. So you take this form, looks like it's Capers Form 7/99R, and this designation of a beneficiary, if you assign it or you tell in this form it's going to be the funeral home, it doesn't make that $6,000 taxable to the beneficiary, and then they have to pay taxes out of that, and then they're left with the net after-tax benefit to go pay for the funeral. This is a better way to do that, and I was so glad that you were there to help explain all this, because again, this is just not my lane. There's so many things that we have to keep track of in this industry, and this is a great idea for anyone that's got that Capers funeral fund, right?
At the end of the day, I mean, I worked for Capers for several years and I didn't even know about it back then. At the end of the day, it's just about getting the maximum amount of money to help with those final expenses. And another point that's really important to know is a lot of people don't even realize they have this additional benefit. You know, you join and you're with Capers for years, depending on your role. Sidebar, there are some of these benefits available through like KPNF for our police and fire and anyone who falls under those. But the point is, if you don't know about it, if you haven't told your heirs about it, if you haven't assigned it to a funeral home, when you pass away, Capers doesn't just automatically say, hey, we got this extra money for you. And they actually specifically say that in some of their documents. If no one comes to us, we don't necessarily proactively go pay this out unless there's beneficiary designees or assignments set up. So definitely hope people give us a call. We have all the forms on that. We have all of the updates. I have some great relationships with the state and those different retiree plans because, you know, we work with a lot of those different agencies, but we want to make sure that people are getting the benefits that they work hard for their entire lives.
Well, and I'm looking at this form here on my tablet, and this is kind of, I find this comical. It's Part D on the form. That's not Medicare. Now we're talking about Capers. Part D,
Yeah.
Optional funeral establishment designation. And this is where you can go to the funeral home or the mortuary or wherever if you're taking care of your final affairs in advance, which most clients do. But I want to circle back around to, you said that if the beneficiary or if someone doesn't go to Capers and say, hey, this funeral fund's out there, Capers isn't going to hunt them down and try and pay this, is what you're saying.
Yeah, and no disrespect at all to Capers or any of those organizations. There's no way for them to hunt all that down. But when you're signing up for beneficiaries, as you pointed out, it's a separate section. So they have made changes in the last few years. The new form says, hey, if you are in Capers and, you know, that's part of KPNF, for example, right? So the police and the firefighters union, there may be some others that fall under that. But now this form actually will change everything for you. And that's why they've specifically separated it out to Section A is for this section, for the pension, Section B for this. So they've done a great job at really making it easier. And they do have some people at Capers to help with things, but can be really hard to get a hold of them because, right, there's thousands of employees. So that's why we stay up to date on this and we want to help people with it.
Sure. And that form again with Capers is Capers 7/99R, or the designation of a beneficiary retired. And this is a great tool for if you have this Capers benefit out there. You need to probably tell someone about it, because when you pass away, you won't be here to remind your children, your beneficiaries, your spouse, whoever, that you have this funeral benefit there. Furthermore, you don't want to make that $6,000 taxable to your beneficiaries. You'd rather all those dollars go towards paying for your final expenses, because this is a benefit you earned participating in the Kansas Public Employees Retirement System, Capers as we call it. But this is something that if you're going to have these, if you're going to go in and prepare for your final, not expenses, but I guess final expenses, you want to make sure you designate this to the funeral home. That way you saved whatever tax bracket your beneficiary's in, whether it's 10%, 12, 20%, 12%, whatever your tax bracket is. And this is a better way for you Capers participants to make sure you're maximizing all those benefits for you. And if you don't have someone that can walk you through these things, reach out and give us a call at 833-MAG-REPORT. Or again, that phone number again is 833, the letters MAG for Market Advisory Group Report. Or you can hop on over to our website at retirehour.com or marketadvisorygroup.com. Well, stay tuned. We'll be right back with Larry Clefcorn, financial advisors from Market Advisory Group Wichita, right after this. Welcome back into Retire Hour, the weekly show that helps you stay up to date on the ever-changing landscape that is retirement. And just an example of that, we were talking with Kimberly Sixkiller before this break about that CAPERS benefit, how it's taxable. I had no idea on that because it's not life insurance. It's a funeral fund or a funeral benefit. And you have that CAPERS form that you can go out there and sign there. That's of great value to the people we help to be able to navigate those things. And then I started off the show with the Social Security is changing. I mean, they're gonna have these new requirements where if you want to change your bank account, you got to prove your identity either in person or on that online account at ssa.gov. Or if you haven't filed for Social Security benefits yet, you're either going to have to go into a office when you decide to file and prove your identity, or again, have that online profile account. So many things are changing right now. But what doesn't change is Larry Clefcorn, who's got us a great story for with a client example here. And this is someone that they were well-to-do. They had a pretty good sizable retirement.
Right. Comfortable, very comfortable.
But they wanted to spend it all.
Yeah.
It's their money.
Yeah. And when he was saying, this is really what I want to do is I am not interested in having a legacy. Not interested. And they don't have any kids.
Oh, well, okay. Yeah. Well, that makes sense then.
So he said, I want to really enjoy this, and right now, while I'm young, is the time to do it. And so several things start going through my mind. This is something that we would call a reverse income plan, in that we're trying to spend it down for their enjoyment, for the things they want to do. And but there's a little piece here that is really important, and that is the wife is 9 years younger than
Oh, that's going to have an impact, right?
Yeah. So we want to make sure that she's going to receive a benefit. Be perfect if it's tax-free benefit, right?
Right, that'd be great.
And make sure that he's covered for long-term care, so she wouldn't be impoverished in his final days, and all that money that they were hoping to enjoy just ends up going to the funeral home.
That is a risk that I think people that do have some different ages, or maybe more than the average years between them, so like 9 years, that's a pretty good age gap. And you're right. If he needs long-term care, he wants to spend all his money. He may spend all of his money on that care, but then leaving your spouse there to just have the higher of the two Social Security benefits and maybe not much else. That is a big risk. And I'm glad. Did you bring in Kim Sixkiller to help with that? Or
it's on the schedule.
It's there. So we're working through that. That's good. That's good. Because again, you don't know if you're going to need 2 months of long-term care or 15 years. I mean, it on average, it's a little more than 3 years, but some people are not average.
We don't get to pick.
That's true. We do not get to pick. So, a lot of things could be coming into play there. Like you said in your notes, there's things we know and there's things we don't know.
Right.
But if he has a long life, that also could have a big impact on the nest egg as well for the surviving spouse.
And, and we kidded around back and forth about, I said, can you tell me when you'll no longer need this? Do you happen to know when you're going to die? My birth certificate didn't come with the expiration date, so I don't know. And so that's part of the, that's part of the planning that's important, and that we can wrap our heads around. And it's going to involve this entire team. It's going to involve Medicare, and it's going to involve estate planning. It's also going to involve taxes. I was speaking to one of our tax advisors about this, and the comment was made, I'm not sure what special, and I stopped her there and I said, remember, tax planning is the first thing that makes good financial planning.
I agree. So many people overlook the tax components with it, and they normally get the surprise this time of year when they file their taxes. Well, what do you mean I'm owing all those taxes on my phantom income that, I didn't take anything out of the account? tax planning is just as important as the financial planning.
It surely is. And, so the unknowns that we have in front of us then is what future health will be, what will be the costs in the future. That we've just been through this whole thing that turned out not to be transitory.
I was going to say, you're going to use the T word, aren't you? Transitory.
Yeah. If I was around them, I'd never let them forget it. How long will they both live? And then specifically, how long will the survivor live and need to be well cared for?
True. And just because the husband's 9 years older than the wife doesn't mean that maybe the wife can go. Statistically, it will be the husband that passes away first because of his age, and males typically do not live as long as females do. Right. But that is a big risk of who will be the survivor and how long will the survivor live, because that can have a big impact on this plan, specifically because he wants to spend all of his money.
Right. And whoever the survivor is, they're not going to want to change their lifestyle.
No.
So we need to plan for that contingency.
And so walking all through these different areas, whether it's the financial advice, the long-term care component of it, the tax planning, this would be very hard to do if it was just you.
Oh, I can't imagine.
And so a lot of people out there, whether they're working with a financial advisor, they're saving towards retirement, but I don't want to say the rules of the game change, but the circumstances certainly change, with Social Security being taxable, with your Medicare, all these different expenses, and then like you got at earlier, the tax planning.
Yes.
And most people are not getting tax planning with their investment advice.
That's true.
And I think they're missing something there.
Yeah. Oh, they're without a doubt they're missing something. It's amazing how many times we'll bring in a tax advisor. They'll see something that none of the rest of us did, and they bring that to their attention, and it's like, my goodness, how much this is going to save us in the long run.
And guys, if you're listening to out there, or you're watching us, wherever you're getting this show at, we got lots of formats. If you don't have someone that can navigate you through all these different things in retirement, let alone when they change through retirement, because we're going through a big change. A couple of things are already on our radar, and he's not even been in office for 100 days. This is someone you need, or if you don't have that someone, you need to reach out and talk to us at 833-MAG-REPORT. That phone number again is 833, the letters MAG for Market Advisory Group Report, or hop on over to the website at retirehour.com. Coming up after the break, you won't want to miss this. I think this is a listener question from Vicky. Her question is, how will Trump raising our prices for drugs to seniors affect my retirement? Also, we'll be talking with Gerald Eidelman, talking about why are trusts so important in estate planning. And then finally, to end the show, we'll be talking with Lauren Dietz, discussing the tax extensions, what those deadlines are, and what you should know and how those extensions work. All that and more coming up on Retire Hour after we come back from this break. We'll see you back here. Welcome back into Retire Hour, the weekly show that helps you stay up to date on the ever-changing landscape that is retirement. And I was talking at the beginning of the show how these changes will be coming to Social Security starting April 1st, or if you have to change your bank account or prove your identity after March 31st, you're going to have to go online or go into an office and show your ID. They will no longer be verifying your ID over the phone. And there's a lot of things changing out there, and I'd actually go even a little further and say there's a lot of uncertainty out there. But this is a listener question, and we've got Mark Benefiel from Market Medicare Advisors. How will Trump raising our prices for drugs to seniors affect my retirement? And Vicky, that question's from Vicky.
Well, it's interesting. Preparing for this question, I spent quite a bit of time searching and trying to find some place where it mentioned that the president was raising prices for medication, and I couldn't find any.
Well, that's it. That's all the time we have this week. Thanks for coming back in.
So, I understand there's a lot of speculation, and we definitely have a lot of people who come to our seminars that we do all across the metro, wondering what's going on and what's changing. And the only thing that I could find so far that the president had done that in those early days of the administration and some executive orders, he put the brakes on a program that was looking at further reductions on some medications, specifically as they apply to generic medications being capped at $2.
Okay.
Interestingly enough, most generic medications come out for most programs at $0 already. So it's one of those programs where I think, so hey, we want to be cautious here. What's going on? And we're looking at everything. So let's slow this down before we kind of know what's going on, who's involved, and what all is involved in it.
And maybe some of the things Vicky's talking about are ripple effects or repercussions from the Inflation Reduction Act that put that cap on the drugs. That's messed up.
And what a lot of people will see is, the Inflation Reduction Act that came in under the previous administration, there was a major change to that started on January 1, which did for a lot of folks cause their some of their prescription costs to go up. But this president didn't take over until mid to late January. So it was actually programs that were previous. So you be very careful. I mean, wherever you want to put the blame, it doesn't really matter. The reality is that so far there's been no additional cost for any medications. The prescription, the Affordable Care Act did cap $2,000 for the amount that a senior could pay.
And in 1 year, right?
In 1 year. But unfortunately, what happened with a lot of folks, that caused a lot of change in the formularies, and certain companies may have increased medications from one level to another tier on a formulary, which caused a increase in cost. Also, there was an increase to some deductibles as well that hit people really hard in January. But that was, like I said, those were things that were in place previous to this administration's. Yet to see any of the new policies that may have put into effect or going to put into effect, how they might apply to any increased costs.
Well, I want to circle back to that 2,000 cap on prescription drugs, which again was in the Inflation Reduction Act, which I think was misnamed. I don't think it did much to reduce inflation, but you have this $2,000 cap. So am I to believe then if the insurance companies are only making a senior or someone on Medicare pay out of pocket in a calendar year $2,000? The insurance company's just eating that, right? They're not passing that along to the other insured or the other company. They're just being very charitable out of their heart, and they're eating anything that goes over that $2,000.
We saw a lot of changes with that, and it impacted a lot of people. There were some people who actually were able to save some costs on some of their medications. Unfortunately, it also caused a lot of folks to have their overall costs to go up because that money gets spread around. We saw a lot of what I would call unintended consequences in the marketplace. There were some drug companies that said, you know what, we're not profitable, so we're just going to get out of that business.
Yeah.
Now we have less competition. What happens when you have less competition? Prices go up. Right? So competition is a good thing. And we also had, there were other people who, like I said, had a certain medication maybe they've been taking for, 10 years. All of a sudden it was raised to a different tier because the drug company has to make up that money someplace because they've now been told you have to eat $4,000, $5,000, $6,000, $7,000, $8,000 worth of costs. They're going to make the money go someplace.
I think that's what my question was alluding to in a sarcastic way, and you know me well. That's kind of how I joke. But the truth of the matter is, there's only 100 pennies in a dollar, and if it's not coming out of the retiree or the Medicare beneficiary's pocket, either the government's eating that, or the insurance companies are eating that, or the government's making the insurance companies really spread the risk around. And like you said, some people that were very healthy and maybe weren't taking anything, they saw their costs go up.
Absolutely. And a lot of with the raising deductibles, it hit a lot of people as well. That was another thing that the companies did to offset this mandate that had to lower the cost, was to move that into deductible phase, which increased the deductible, which now people have to pay more money out of pocket up front. And in some cases, people were not ready for that or realized that was going to happen. We also had some of the lower cost carriers when had the lower premiums get out of the market, which then caused other companies to increase their premiums. So yeah, your drug cost is lower, but your premium is higher.
It's there, like I said, there's only 100 pennies in a dollar, and if the government's going to make these rules that give a cap, there's going to be, like you said earlier, some unintended consequences there. And like you said, there's some companies that got out of the market completely and said, "Hey, this is not for us. We're not going to do it." And the ones that stayed, like you mentioned, it's causing those costs to be spread around more. Yeah. And that could be what Vicky's talking about on raising drug prices. But
people need to be careful. Like it or not, there's been a lot of costs that have been arbitrarily held down for the last several years. And, we're seeing supplement rates right now going up. You can only hold those down so long, and then those companies no longer going to be able to be in business because they're not going to be profitable. So in an effort to be profitable, they've had to raise their rates. And we're seeing large rates across the board, 8%, 10%, 12%, that started last year. So once again, be careful on where you place blame, and understand that this is an ongoing problem that's trying to get looked at and fixed, but it's not going to be simple.
And just like Ronald Reagan said, I'm with the government and I'm here to help you. It's not
Exactly.
something sometimes
be
you
careful. Yeah, they don't always have your best interest at heart.
Well, I think their intentions are good. I just think, like you said earlier, it's the unintended consequences, the other ramifications. And guys, if you've seen your Medicare coverage either increase or maybe your supplement increase, reach out and give us a call. They'd love to walk you through to see if you could save any money. That number is 833-MAG-REPORT. Or again, that phone number is 833, the letters MAG for Market Advisory Group Report. Or you can hop on over to our website at retirehour.com. Stay tuned. We'll be right back with Gerald Eidelman talking about why are trusts so important in estate planning. You won't want to miss it. Welcome back into Retire Hour, the weekly show that helps you stay up to date on the ever-changing landscape that is retirement. I'm your host, Matt Goolsby, and I meet a lot of people. I mean, sometimes 8, 9 different appointments a day. We run really busy around here, and that's because so many people need this complete team. But I was in an appointment just yesterday, and I want to bring up that she told me, or she asked me, she goes, I need a trust. My sister said I need a trust. I need to have this trust, blah, blah, blah. And I was asking her, let's call her Susan. I was asking Susan, I said, well, why do you think you need a trust? Well, she goes, well, I don't want any of my stuff to go through probate for my loved ones. And I was talking with her and brought in Alex, and one of your junior attorneys with your firm. And he came in the room and we were talking, and really we walked through, and she didn't probably need a trust. She didn't have a blended family. She wasn't trying to control spending from the grave. This was something where she just wanted to make sure it didn't go through probate. And there's other ways to avoid probate besides just having a trust, but a trust is a good way to avoid probate.
Yeah, there are other ways to avoid probate depending on what kind of assets you have. If you have assets that can be put into beneficiary form, if you have real property that can be put on a transfer on death deed, those sort of assets can pass without having to go through probate, just by designating the right beneficiary, and that would be the end of it. However, if you do that, you take the chance that when you pass away, one of those beneficiaries may not be alive to receive it.
It's true.
And if they're not, then that situation is going to go to probate. Now, it's not going to go to your probate, it's going to go to the beneficiary's probate, but even though you didn't spend it from your own money, you kind of will, because it's going to come out of the estate that you leave to that deceased person.
I want to circle back around to that because you kind of were nonchalant when you went over that. I think it's a really important point to highlight. If you have a beneficiary on an account, but you and that beneficiary pass away together, that asset's not going to go through your probate. It's going to go through your beneficiary's probate. Correct. And who knows where it's going to land there.
That's right. And of course, again, we're back to the cost. Probate can be about $6,000-$10,000 minimum. And the question as you begin to look at the benefits versus cost, and you say, well, I can want to pay $10,000. Well, I'll be dead. Who cares? But if you can do it right now, you can only not pay less, but also plan contingency plans like the situation that I was telling you about. With the trust, you can designate what happens if a person who is a beneficiary dies before you do or dies with you. And so it can be passed to the children, it can be passed to, Costa and Ella, whoever you want to pass that piece of that asset to. It can be transferred without having to go through probate at all. There's no delays. People don't understand is that a trust gives you complete privacy and autonomy from the courts. So you can do things that you wouldn't be able to do without the court's permission, which takes a long time of filing papers going back and forth, the court approving papers. That's why, a probate state can last 6 months to a year minimum, and then some last a lot more. With a trust, you're going in and you're saying, okay, what did Aunt Mary want? Or Susan, we said, right?
Yeah, Susan.
Yeah, what did Aunt Susan wanted? And she put me in charge of this, and I see all the things she wanted me to do, and I'm going to take her guidance and carry it out. I will gather the money, I will distribute the money, and when I'm done, I'll close the accounts and be done with it. That you can't do with a probate state. You just have to wait your time, have to wait for the court to say, yes, you can do something. Biggest thing is real estate sales. The court requires, an independent appraisal.
Mm-hmm.
They have to approve that appraisal. It's got to be within a certain percentage of the fair market value. And so there's a lot of things that could delay that sale that you could do probably in a month. It'll take you, 4 or 6 months.
Believe it or not, this happened a couple of years ago, but my neighbor, his name was Ernie, he died, and he didn't have an estate plan. And that house sat empty for about a year and a half. The grass grew up about 3 foot tall. I think Clint went over, my maintenance guy, he went over and helped me mow it one time. But you're right. Probate, you wouldn't wish that on your worst enemies.
No.
And a trust is a good way to ensure that if you do want to avoid probate for your loved ones, even if you forget an asset, oftentimes the will say this goes to the trust, and it's kind of like a cleanup crew.
Right, and we're covered. Whenever we set up a will, we set up what's called whenever we set a trust, we set up a pour-over will, and the pour-over will just says whatever is out there goes to the trust. That requires a very simple probate estate. It doesn't require approval from the court. Just simply, this is what it states. This is what it goes. There's no need to, praise anything, or it just simply gets transferred to the trust.
In Kansas, and I know you're licensed other places, but Kansas predominantly is where our audience is. That's what that form you're talking about is. As long as the assets or the total assets is it $75,000? That small.
Oh yeah, if it's under $75,000, as long as it's not real property, you can do what is called a small state affidavit, which is really filling out a form and handing it to whoever is holding the money. There is no court involvement in that situation.
And you were mentioning there, if that asset's under that $75,000 in Kansas, if it's missed from the trust or the beneficiary wasn't right, you can do that and it gets it right into the trust.
Correct.
And all that. And
Correct.
This is something that, again, is not a set it and forget it either, because as you move and maybe change assets or things, if you don't have that trust updated, it can be kind of confusing.
Oh, absolutely. I mean, I have people who come to me with 20-year-old trusts.
Oh my gosh.
Which they said when their kids were minors.
Yeah.
So now the kids are old enough to take care of things, and they have appointed in trust some people who might be dead now.
Yeah.
And I always recommend to review a trust 3 to 5 years. Make sure that your living situations have not changed. The law changes too.
Oh my gosh, yeah, and it might even change some more. And if you guys are out there, if you're worried or concerned that you don't have the right plan, or your loved ones may have to go through probate, worse yet, reach out and give us a call at 833-MAG-REPORT. That phone number again is toll free. It's 833-MAG-REPORT. Or you can go over to our website at retirehour.com or idlemanlawfirm.com. Well, stay tuned. We'll be right back with Lauren Dietz with Market Tax Services discussing extensions. Some things you need to know. Stay tuned. Welcome back into Retire Hour, the weekly show that helps you stay up to date on the ever-changing landscape of retirement. And you may have seen her on the Taxes and Tacos show, or no, Tacos and Taxes?
Taxes and tacos.
Taxes and tacos.
I mean, semantics.
Lauren Dietz with Market Tax Services. You and Joshua get in there and try some good tacos from different places around Wichita and Kansas, and then you also talk about taxes.
Yeah.
Because
yeah.
the tacos make the taxes more
Palatable?
Palatable is probably the right word. So we are coming up here. We're almost at the end of March. And if people have not gotten their act together and started either working with someone to help prepare the return, or if they've not started even any of the work to work on the return, they file this extension and everything is great, right?
Yeah, everything's great. So I think a lot of people, what they don't realize is when they ask for an extension, you get a 6-month extension to file your taxes, not to pay them.
So October 15th then becomes your deadline, but really
Yes.
any taxes owed
Are due by April 15th still.
So how do you do that if you haven't got your tax return done?
It's a good shot in the dark.
A good shot in the dark. Are there, because Joshua will talk about protective estimates or
Right.
those
yeah.
things.
Yeah. If people are doing estimates, especially if there wasn't any major deviation from whatever was estimated for the current year, then they're probably pretty on target with what they owe. But if people, maybe something happened, like you inherited something, or like, you took a lot of money out of any sort of an account.
Retirement account.
Yeah.
Or they even lost
Or-
a spouse because they'll build, or that would be the previous year. But
Yeah.
they went from a married filing joint last year to now filing single. That's going to change some things.
Right, yeah. And a lot of people, they don't think about that until they're in that next year, and then it's like, oh, wow, this made a huge difference on my taxes this year.
And sometimes what I find most often, it comes along that situation where someone has lost a spouse, they just kept their withholdings all the same, and the tax rates change.
Right.
Not normally to your benefit when you go from married to single.
Correct, yeah, because when you go from filing a joint return to a single filing return, I mean, your standard deduction gets cut in half, and those tax brackets, they get smaller. So it's
And again, that sounds like sometimes I think well, the tax brackets is smaller. Oh, that's good. It means less taxes. No. It means the dollars are you're going to hit those different tax brackets at faster with
Yes.
less dollars than you
Yeah.
were at married filing
Yeah.
joint. So these extensions, is this something you just get online and download a form and mail it into the IRS? What's a good way to do an extension?
So there is a way that you can do that and snail mail it to the IRS. The better way to do that is to talk with your tax professional and request one, and we can e-file that, and then we have immediate acknowledgement that it has been accepted.
And so if it's out there in the mail, I think the rules are, and correct me if I'm wrong, which you will, but if you have it postmarked by April 15th, that's kind of your saving grace. But what if at one point in time during the pandemic, the IRS had 10 plus
yeah.
million unopened pieces
Yeah, like
of mail.
trucks of unopened mail. Yeah.
And so you don't know where that's going out there. But
Right.
that is technically, if your letter would ever show up with the postmark.
That's true. And we always recommend, if you are going to mail anything to a taxing authority, whether it's the IRS or your state taxing authority, certify mail that, so that at least you've got some sort of proof that got done.
And I can remember when you started and you were helping Joshua out, and you guys were sending some registered mail, and the IRS actually has a specific way you have to register certify the mail, right? It's not just, you just can't put it on an envelope. There's some other little nuances there,
Yes, yes, there are.
right? What are those?
With that, yeah, you've got the little forms that you got to fill out, and then you want to make sure that you fill them out correctly, or else.
And you're talking about the certified mail form,
Yeah.
not the extension form.
Right,
This is
not
more
the extension
government
form.
paperwork.
Yeah.
More
Oh, yeah.
government paperwork.
Oh yeah. And not only that, depending on where you live, some states have their own extension forms. We're lucky Kansas just accepts the federal one, but some states, and I think a lot of people don't realize, this state that I live in, I have to
File my own form.
send a separate extension.
We've got some listeners over on the other side of the state line on Missouri. Does the Missouri recognize that federal form? Or
Yes, they do.
okay,
Yeah.
so that's good. So our kind of clients are okay there. They don't have to worry about filing a separate state form.
Right, yeah. And a lot of times what we've come across is, most of the people that we work with are Kansas, Missouri, maybe Oklahoma, like all of these states nearby, but maybe they worked in another state and now they've got to file an extension for that state too. So not knowing, and we do a pretty good job of tracking that and making sure that we keep that up to date.
You're almost like a tax Sherpa. You show them the way and you help them through it. You weren't expecting that, were you?
What's not?
So if you don't have anyone out there that's helping you navigate these situations or all this government paperwork or just the mundane everyday tasks that are necessary to have an enjoyable retirement, reach out and give us a call at 833-MAG-REPORT. Or again, that phone number is 833, the letters MAG, stands for Market Advisory Group Report. Or you can go over to our radio show website at retirehour.com, or Market Tax Services is another way you can get a hold of them over there. And you're on TV this week too, right?
Yes.
Radio and TV. Who'd you upset? Did you?
I don't know. I drew the short straw this week for sure.
I just wondered if Josh was just buried in his cave of the office, just going through tax returns just as fast as he can.
Yeah, it's like the Tasmanian Devil.
The Tasmanian Tax Devil.
Oh, ooh, I like that. He's got a new nickname.
Well, we appreciate you guys tuning in to Retire Hour. Don't forget to check out our other show that Lauren will be on TV on Eye on Retirement. You can catch that. Depends on which market you live in, but check Eye on Retirement for show times. That's all the time we have this week. Thanks for tuning in. We'll see you next week here on Retire Hour.
Unless otherwise indicated, all client names have been changed to protect their identities. Investment advisory services are offered through Foundations Investment Advisors LLC, an SEC-registered investment advisor. The content provided is intended for informational and educational purposes only. The views, statements, and opinions expressed herein are those of the individual speakers and not necessarily those of Foundations and its affiliates. The information contained herein does not constitute an offer to sell any securities or represent an express or implied opinion or endorsement of any specific investment opportunity, offering, or issuer. Any discussion of performance or returns are not indicative of future results. Each individual investor situation is different, and any ideas provided may not be appropriate for your particular circumstances. Foundations only transacts business in the states where it is registered or excluded or exempt from registration requirements. Registration as an investment advisor is not an endorsement of the firm by security regulators and does not mean the advisor has achieved a specific level of skill or ability. No legal or tax advice is provided. Always consult with a tax professional. Legal services are offered by Edelman Law Firm. Tax services offered by Market Tax Services. Market Advisory Group does not provide legal or tax advice. Any comments regarding safe and secure investments and guaranteed income streams refer only to fixed insurance products. They do not in any way refer to investment advisory products. Rates and guarantees provided by insurance products and annuities are subject to the financial strength of the issuing insurance company, not guaranteed by any bank or the FDIC. The guest commentators featured in this show are not investment advisor representatives of Foundations and do not provide advisory services. Market Advisory Group does have several investment advisor representatives that can provide such services. This is not endorsed or affiliated with any U.S. government agency, the Social Security Administration, or associated with any federal Medicare program. We do not offer every plan available in your area. Any information we provide is limited to those plans we do offer in your area. Please contact Medicare.gov or 1-800-MEDICARE to get information on all of your options. A Roth conversion may not be suitable for your situation. The primary goal in converting retirement assets into a Roth IRA is to reduce the future tax liability on the distributions you take in retirement or on the distributions of your beneficiaries. The information provided is to help you determine whether or not a Roth IRA conversion may be appropriate for your particular circumstances. Please review your retirement savings, tax, and legacy planning strategies with your legal/tax advisor to be sure a Roth IRA conversion fits into your planning strategies. All rights reserved.